The announcement today is significant and requires careful attention. For those receiving Social Security, SSI, SSDI, or VA benefits, news of direct payments immediately draws both hope and caution. This is understandable. Over the years, any discussion involving the Social Security Administration and additional payments has sparked curiosity, concern, and the need for clarity. Today's update is not about creating urgency or hype. It is about explaining what is happening, who is eligible, how the payments are calculated, and what recipients should realistically expect. This guidance is particularly important for older Americans and households on fixed incomes who carefully plan every dollar of their budget. Over the past several months, the Social Security Administration has been coordinating with the Treasury and other federal agencies to process certain payments for individuals who qualify based on existing rules and benefit records. While media headlines often simplify or exaggerate the story, understanding the details ensures seniors can approach this information calmly and confidently. The payments being released are described as direct, meaning they will reach recipients without any new application process. These are not emergency checks like those issued during pandemic stimulus programs. Instead, they are targeted payments based on previously determined eligibility and existing benefit structures. That distinction is important because assumptions that the program mirrors prior universal stimulus initiatives can create confusion. The first key point to understand is that the SSA is not launching a new, permanent benefit or a recurring monthly supplement. Instead, these are one-time payments connected to adjustments, reconciliations, or credits related to prior filings, income assessments, or program calculations. For many seniors, this may sound complex, but breaking it down step by step can provide reassurance. The SSA, like the IRS, periodically reviews records to ensure benefit accuracy. When corrections, recalculations, or adjustments are made, payments may result automatically to eligible individuals. This is why recipients do not need to submit forms or applications in response to this announcement. January 26th and the surrounding weeks have become a focal point because they align with the administrative processing window during which these payments are being issued. Thousands, even millions, of direct deposits and mailed checks can be released in a single batch. Some recipients may see their funds arrive immediately, while others may receive them days later. Paper checks often take longer to reach individuals who do not use direct deposit, but this does not indicate a problem with eligibility. Understanding the timing helps prevent unnecessary worry or misinterpretation of delays. Seniors who primarily rely on Social Security retirement benefits will notice that these new payments are separate from their regular monthly benefit. Receiving one of these direct payments does not reduce the standard Social Security deposit. For SSI and SSDI recipients, the distinction is slightly more nuanced, but the principle remains consistent. These payments are corrective or reconciliatory in nature, designed to address amounts owed based on calculations under existing program rules. They are not wages, earned income, or loans, and they do not create future obligations for repayment. One of the reasons this announcement may generate concern is that previous experiences with IRS or SSA communications have left some individuals wary. Unexpected deposits can be both comforting and disconcerting. Comfort arises from having extra funds available to cover groceries, utility bills, medications, or other essential expenses. Concern arises from fear of mistakes, potential scams, or the misconception that receiving extra funds might trigger future penalties. Seniors should understand that these direct payments come through official channels. Direct deposits are traceable, and mailed checks are sent via recognized postal procedures. There is no requirement for beneficiaries to call, sign up, or provide sensitive personal information to trigger these payments. The second important point is eligibility. Contrary to what some media sources may imply, not every Social Security, SSI, SSDI, or VA recipient will automatically receive these direct payments. Eligibility is based on prior records, income verification, benefit calculations, and administrative adjustments. For Social Security retirees, eligibility often relates to income thresholds, tax withholding records, and prior benefit reporting. Seniors who rely on supplemental income or worked part-time in the prior year may see adjustments that affect the payment amount. For SSI and SSDI recipients, eligibility also considers reported income, household composition, and program-specific rules. Veterans receiving VA benefits are generally unaffected in terms of benefit reductions because VA compensation and pensions operate independently of SSA payments, but they may still qualify if prior income or tax-related adjustments make them eligible. For Social Security retirees, it is important to understand that monthly benefits are calculated separately from these one-time direct payments. Receiving a payment today does not indicate any changes to retirement benefits, COLA increases, or future deposits. This ensures stability and peace of mind, especially for those living on carefully planned budgets. SSI recipients may encounter different reporting rules, but the key principle is the same. These payments are generally treated as retroactive or reconciled amounts and do not automatically disqualify beneficiaries from their regular assistance. Direct payments may appear under unfamiliar descriptions in bank statements. Seniors should not be alarmed if the deposit does not say stimulus or SSA adjustment. The SSA uses internal codes to process these transactions. While the descriptions are not designed for public clarity, they are legitimate. Familiarizing oneself with these codes in advance can prevent unnecessary concern or calls to banks or SSA offices. The timing of payments may also vary depending on whether a recipient uses direct deposit or receives paper checks. Direct deposits are faster and usually arrive within 1 or 2 business days of the processing window. Paper checks require printing, mailing, and delivery, which may take a week or more. Delays do not indicate denial or eligibility problems. Similarly, if a recipient sees the payment arrive slightly earlier or later than a neighbor or spouse, this does not imply any preferential treatment. The SSA processes payments in batches based on administrative sequencing and historical records, not on individual preference or order of sign-up. Income thresholds and past year income reporting play a critical role in determining eligibility. Payments are calculated based on the tax or benefit year being reviewed, not current income levels. This is why two seniors with similar present-day finances may have different outcomes. Changes in marital status, adjustments to prior year earnings, or corrections in benefit reporting can influence the eligibility calculation. These variations are administrative rather than subjective, and they follow documented rules. For seniors who have not filed taxes in recent years, this does not necessarily prevent eligibility. The SSA, in coordination with the Treasury, can verify income through prior filings, benefit records, or non-filer databases to determine whether a recipient qualifies. This is particularly relevant for Social Security retirees whose only source of income may be benefits. If they qualify for a retroactive adjustment or reconciliation payment, the SSA will issue it automatically, without requiring new filings. It is equally important to distinguish these direct payments from cost of living adjustments or inflation relief. While Social Security benefits receive annual COLA increases to account for inflation, these direct payments are not recurring supplements or bonuses. They are one-time reconciliations or corrections tied to past calculations or benefit adjustments. Misunderstanding this can create false expectations about future monthly deposits, which is why clarity matters. Seniors who experienced income changes in the previous tax or benefit year should pay particular attention. Part-time work, withdrawals from retirement accounts, or adjustments to reported income may shift eligibility thresholds. In some cases, individuals who initially believed they were not eligible may discover that recalculations place them within qualifying limits. The SSA's automated systems capture these scenarios, which explains why payments sometimes arrive months after the original evaluation period. Another aspect to consider is the emotional impact of unexpected payments. Many seniors live on carefully managed budgets, so any unanticipated deposit can trigger a mix of relief and anxiety. Relief comes from the immediate availability of funds for necessary expenses, while anxiety may arise from fears of error, fraud, or future repayment obligations. It is essential to approach these payments with an understanding of their official source and legitimacy. Scammers often exploit moments like this by spreading exaggerated claims, threatening deadlines, or requesting personal information. Seniors should remain aware that legitimate SSA or Treasury payments require no such action. Social Security beneficiaries should understand that these payments do not reduce their retirement benefits. SSI recipients should note that while retroactive or corrective payments are generally not counted as ongoing income, Reporting rules may vary by state or program. SSDI recipients similarly can receive adjustments without affecting their monthly disability benefits. Veterans receiving VA pensions or compensation should be reassured that SSA payments do not interfere with VA benefits. These payments exist alongside existing benefits, not in place of them. Understanding payment methods is equally crucial. Direct deposits are the fastest and most secure method for receiving funds. Seniors who have opted for paper checks may experience additional wait time, which is normal. The SSA prioritizes accuracy and official processing over speed, ensuring that every payment issued is backed by records and calculations. This procedural approach prevents mistakes and safeguards both the agency and recipients. Another common concern is whether receiving these direct payments could affect participation in other assistance programs such as SNAP, housing subsidies, or Medicaid. Generally, one-time reconciliations or retroactive payments are treated differently from regular income for eligibility calculations. Programs recognize the distinction between temporary administrative payments and ongoing income streams, preventing unintended reductions in assistance. Seniors relying on multiple programs should take comfort in the system's design to maintain balance and fairness. For seniors managing complex finances, these direct payments may raise questions about taxation. Most SSA-issued payments connected to reconciliations or adjustments are not taxable income in the year they are received. This helps prevent unexpected tax liabilities and provides additional reassurance for individuals concerned about the impact on their overall financial picture. While individual circumstances can vary, the overarching goal of the SSA and Treasury systems is to provide corrective relief rather than create new obligations. January 26th and the surrounding processing window have become focal points for attention. This timing reflects the administrative schedule for batch processing, not a fixed date for every individual. Some recipients will see payments immediately, while others will receive them later in the same cycle. Paper check recipients may experience the longest wait. This variation is normal and does not signal approval, denial, or eligibility issues. It is simply part of how large-scale payment systems operate efficiently and accurately. Seniors should also understand that these payments reflect documented eligibility criteria. Comparing outcomes with friends, neighbors, or spouses can be misleading, as small differences in past year income, filing status, or benefit reporting may result in different payment amounts. Focusing on one's own official records and communication is the best way to maintain peace of mind. Direct payments may appear under a variety of labels on bank statements, sometimes abbreviated or coded. This is normal and part of the SSA's internal accounting practices. Seniors should not panic if the description is unfamiliar. Verification can always be sought through official SSA channels, but there is no need for concern if the deposit appears under a generic code. For retirees, part-time workers, or those with additional sources of income, eligibility calculations can be intricate. Minor differences in reported income, corrections to earlier filings, or updates to benefit records may affect payment amounts. The SSA uses automated systems to reconcile these situations accurately, which is why payments may arrive long after the relevant period. The goal is to ensure that each eligible individual receives the correct amount without unnecessary delay or error. For SSI recipients, income and asset rules are strict, but one-time SSA direct payments are usually treated differently from regular ongoing income. This means that receiving a payment does not automatically endanger SSI eligibility. SSDI recipients, whose benefits are based on disability status, also generally receive these adjustments without affecting their monthly benefits. Veterans receiving VA pensions or compensation can similarly be assured that these payments will not interfere with their benefits. Finally, seniors should focus on the broader purpose of these payments: administrative corrections and reconciliations based on existing laws and benefit calculations. They do not indicate a new program, loan, or emergency supplement. They are official, traceable, and legitimate, designed to ensure accuracy and fairness in the system. This understanding reduces stress, prevents unnecessary phone calls or inquiries, and allows recipients to use the funds effectively for their needs. As this process unfolds, clarity is the most valuable tool. January 26th and the following days represent a processing window rather than a universal payout date. Eligibility is determined based on past records rather than new applications. Payment amounts and timing vary depending on individual circumstances, but the underlying principle remains consistent. These are official adjustments and reconciliations intended to settle amounts owed to eligible recipients. Understanding this provides stability, replaces uncertainty with confidence, and reassures seniors that their financial foundation remains intact. It is natural to have questions, but the focus should remain on official guidance rather than headlines or social media speculation. Direct payments issued by the SSA are based on documented eligibility, processed according to standardized rules, and do not require additional action. Seniors should feel informed, not rushed, reassured, not anxious. Knowing that these payments coexist with ongoing Social Security, SSI, SSDI, or VA benefits helps maintain financial confidence and prevents unnecessary stress. As recipients begin to see these payments, some may have questions about timing, eligibility, or future reporting. The key takeaway is that payments are calculated and issued according to existing rules. Delays are procedural, eligibility is passive rather than active, and payments are reconciliatory rather than ongoing income. Social Security and other benefit programs continue unaffected. Retroactive or corrective payments from the SSA provide supplemental funds, helping seniors manage household expenses, medical needs, and other essentials without altering their standard benefit structure. Understanding the distinction between one-time direct payments and ongoing benefits is critical. One-time SSA-issued payments, even if substantial, do not alter monthly retirement, disability, or veterans' benefits. These payments are processed based on prior year records, reconciled credits, or administrative adjustments. For SSI recipients, reporting rules exist, but one-time reconciliations generally do not trigger reductions in ongoing assistance. SSDI and VA benefits continue as calculated and are unaffected. Seniors should also recognize the difference between direct payments and external stimulus initiatives. While emergency pandemic checks created widespread public excitement, these SSA payments are targeted, administrative, and rooted in specific eligibility criteria. They are not universal, do not require applications, and are released according to processing schedules. Understanding this prevents false expectations and ensures that recipients can approach the announcement with informed calm. It is also worth noting that eligibility is determined quietly and passively. Seniors do not need to contact the SSA, submit new forms, or provide additional documentation to trigger these payments. The agency reviews existing records, calculates corrections or reconciliations, and issues payments automatically. This process ensures fairness, accuracy, and adherence to law. It also protects seniors from the pressure of misinformation, scams, or false claims circulating online. In conclusion, the upcoming direct payments from the SSA represent an important administrative update, not a new program. January 26th and the surrounding processing window marks the release of these payments, which are issued based on prior eligibility, reconciled credits, and corrections to benefit calculations. Social Security, SSI, SSDI, and VA benefits continue unaffected. Payment timing and method vary based on individual circumstances, but all dispersed funds are legitimate, traceable, and legally authorized. Seniors should approach this information with understanding, patience, and confidence, knowing that these payments are designed to support financial stability without creating new obligations or affecting ongoing benefits. Awareness, clarity, and measured attention are the best tools for navigating this update, ensuring that every recipient feels informed, steady, and prepared to manage their finances effectively.